topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Expert show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Florida. Welcome to another Ask the Expert show, where for the last 16 years, we have brought you the finest experts in the field of legal, health, financial, and home improvement. The show this morning is gotten so popular. We do not only one show a month, but we do two shows a month. The first Monday of the month and the third Monday of the month. This show, I got to tell people, we do about 25 shows a month. It's a lot of shows. This show here goes by so fast, and it's due to our great expert, Ray Farrar, with Provise Management Group. But I want to tell people we really appreciate, because I've been looking at the numbers for YouTube, and I just want to tell people we appreciate you all tuning in. This is a very important show, especially when it comes to the economy. And I got to tell you, we are so blessed to have Ray Farrar. Good morning, Ray.
Good morning, Stephen. It is very nice to be with you.
I got to tell you, I love doing this show. It is such an easy show to do. Tell people, I've seen the numbers growing, and I see we are getting new listeners and viewers for each one of your shows. So there's a lot of people who aren't familiar with Provise Management Group. Tell people about your firm.
Stephen, delighted to do so, and thank you. Provise Management Group is a financial planning and investment management firm registered with the Securities and Exchange Commission. We always put the emphasis on the financial planning, even though we're managing about $2 billion on behalf of our roughly 1,200 clients scattered over 30 plus states. And the reason for that is that we feel that as long as you have a plan, your odds of success will improve for success, financial success. And more than that, we'll then understand really how to invest the money. Are we investing it for a college education? Are we a second home, retirement? Where are we headed? And we always offer our listeners a complimentary 1-hour consultation with me by Zoom. And all they have to do if they would like to schedule that complimentary 1-hour consultation is to give us a call at 800-633-3049. That's 800-633-3049. And just having to schedule that appointment with Ray, and I'll be happy to give you a call back, and we'll get it on the calendar.
You also, because I get them, you also do a mailing, your newsletter. Tell people about your newsletter.
We do a newsletter twice a month on the 15th of the month and on the last day of the month, or the first day of the following month. And it's we call it the Provise Perspectives, and it's a kind of a brief hitting, a couple of ideas on financial planning for people, what's happening in the economy, what's happening in Washington, D.C. Matter of fact, we'll talk about that a little bit later this morning. And to give people a general sense as to what we think is going on. So if you'd like to get that, even if you don't want to schedule an appointment, that's fine. Again, just give us a call at 800-633-3049, and we'll be happy to add you to our email list.
Well, Ray, the number one topic this morning is the shutdown. Give me your thoughts.
Well, let's see. It stinks. Would that be a good way to put it? This shutdown is a partial shutdown. It is really a political argument between the Democrats and the Republicans. All of this comes out of the immigration and customs enforcement that's going on in various parts of the country, specifically up in Minneapolis, where two people were unfortunately killed by ICE agents. And up to this point, the president and the Republicans have not been able to come to an agreement with the Democrats over some changes that they want to install in the workings of ICE. So FEMA is shut down. Let's hope we don't have any disasters that
Yes.
we dealt with. Immigration and customs is shut down. TSA at the airports, the folks are considered mandatory employees. They have to continue to work without pay. Normally, it will be retroactively given back to them, but it doesn't help them pay their bills today. So it causes disruptions. Many of them are expected to take sick leave. And when they do, many of them really won't be sick. They'll actually go do something else to try to earn money for that day, whether it's being an Uber driver or working in a local retail store. These shutdowns are never good for the political atmosphere and definitely not good for the economic atmosphere. Being a partial shutdown, it won't be quite as dramatic as the one that we had last fall, but any shutdown is not a positive for our economy, and more importantly, for all of the people that are affected by this. Not suggesting that one side or the other is correct or wrong in this particular political debate that's going on. We look at things strictly from an economic standpoint, and it's unfortunate. And it doesn't look like it's going to get settled anytime soon, because Congress really doesn't get back together now until the 23rd, which is next week. So that's kind of where we are. Hopefully it'll end quickly when they do come back.
Ray, how much do you think this is going to affect the economy?
I think it'll shave a little bit off of GDP. It's not going to be a lot, but it is going to slow things down for this first quarter of the year, much like it slowed down things in the fourth quarter of last year. But again, this one will not be nearly as significant as what we had in the fall.
Well, gold and silver and Bitcoin all went to all-time highs, but silver and Bitcoin have dropped unbelievably, Ray. Do you think this is also going to happen to gold too?
Well, that's good. That's an interesting question, I guess, is the best thing to say. First of all, let's talk about silver and Bitcoin. It will come as no surprise to you, Steve, or to any of the listeners of Ask the Experts that we are not fans of Bitcoin. We do not know how to value Bitcoin. None of our clients have ever been recommended to buy Bitcoin, and until I can understand how to value it, I don't think any of them ever will be. Some of them have decided to buy it on their own, and they watched it go up into the $120,000 range, only to see it be cut in half to drop down to $60,000 here in the last month or so. So it's the Bitcoin is what one person is willing to pay another who's willing to sell it at whatever price. It wouldn't surprise me to see it continue to remain under pressure at the present time. Silver is a different story. Silver, a lot of speculation that was going on with silver. Because gold had gone up, silver had not gone up in price. There's always been kind of a ratio between gold and silver prices. Silver got a little behind, and then the mania came in, and people started borrowing money to go buy silver, and buying on leverage it is generally not a good idea, because if you are buying and the price goes down, you're going to be forced to sell it. And that's what happened. The price started to go down, started to unravel. More and more people had to sell to cover the loans that they had, which were no longer collateralized by the silver they had that they had bought. And that's why it collapsed. Gold has climbed over $5,000. At one point touched $5,500. And I'm reminded of gold going back to the 1970s. I mean, most people don't realize, Steve, that up until the time that President Richard Nixon took us off of the gold standard, gold sold for $35 an ounce. Not a penny more, not a penny less. It was a fixed price. But when he took us off of the gold standard, then the price of gold was able to float in the marketplace. And it's always been looked at throughout history, many histories, as a storehouse of value, the one stable thing, if you will, that could be passed on from one person to another. And in the 70s, it went from $35 an ounce to up over $800 an ounce by the early 80s. So you were looking at almost probably 25%, 25 times, I should say, increase in the price of gold, only to see it collapse and go back into the $150 an ounce range over time. My fear is that gold, which has risen dramatically, not the same as it did in the 70s, but it's still risen dramatically, from something in the $1,500 to $1,800 range up over $5,000 now, that a similar thing will occur. I don't think that we'll see a 50% cut in the price of gold, but I would not be surprised to see gold retreat 20 to 25% from its current highs, and then perhaps stabilize at that area, much like it did during the 80s after collapsing from the 70s. So if you've held gold and you've had gold, there's nothing wrong with taking some of your profits and running. As the saying goes on Wall Street, the bears can make money, the bulls can make money, but the pigs always get slaughtered. So think in terms of maybe taking some of your profits and locking them in while you continue to hold some gold for the long term in the future.
Hey, we just got a text in from your backyard, Tampa, Mark in Tampa. He said, I really enjoy your show. I try to listen to it at least once a month. I really respect your opinion. I bought silver at 23. Do you think I should hold on to it, or should I worry that it's going to drop a lot lower?
So, Mark, thank you for your compliments on the show. Both Steve and I appreciate that a lot. It's hard to tell you what to do without knowing the rest of your situation. But as I just said, I mean, if you bought silver at 23 and now you're looking at silver that's double or triple that price, again, why not at least sell enough to get your original investment back and let your profits run?
Oh, that's a good idea.
You're then playing with house money. Or sell half of it and keep another half would be another way of kind of compromising on it. Things do not go up forever.
Yes.
Trees do not grow to the sky forever. Eventually they fall, and lightning can strike them, wind can hit them. And the same thing can happen with investments. Lightning can strike, wind can hit them. Keep in mind, whatever your long-term plan is, that if this activity is trading activity, that's one thing. If it's a long-term investment, it's another. But again, at least sell whatever you originally invested, or perhaps consider selling half of it and letting the profits run. Okay. Or not, as the case may
right. be. So, Ray, what are your thoughts regarding most recent reports on inflation? And we just got employment back last week. What are your thoughts?
So the news is good from this last report. Inflation, let's talk about that first, since that's really in the headlines and everybody's talking about affordability. The inflation rate was 2.4%, down from 2.6% the previous month, and closer to the Fed's target of 2%, but it's not there. And as we projected at the beginning of the year, and we still believe that this will be the case, that inflation will continue to moderate throughout this year, but we don't see it getting back into the 2% range to make the Fed happy. Having said that, the fact that it did come down may allow the Fed at one of its future meetings to tick off another quarter point on interest rates. And if they do that, we would think that that would likely happen at the May meeting, which would be Powell's last meeting.
Yes.
But we still have a lot of data to see. March, February and March's will be after that meeting. We've got other reports coming, employment a more frequent basis. And the unemployment surprised people that it also ticked down a little bit. But keep in mind and do some further analyzation that unemployment is defined as the number of people who are active, who would like to find a job but can't find it. And so if somebody quits looking, they drop out of the numbers. And at this point, it's hard to tell whether it was people who were discouraged that they couldn't find a job that dropped out, or whether more people were absorbed. Probably have to lean a little bit to more people being absorbed, because the expectation was that new hires would be 75 to 80,000. And in fact, they came in at about 50% higher at about 120,000 new jobs. And many of those jobs, in fact, the majority of those jobs were in the healthcare industry. So it's not really broad at the moment in terms of hiring. What we really have today, and it's an interesting phenomena, nobody's firing people because we don't see first-time unemployment claims climbing, but nobody's hiring either. So it's a no fire, no hire. Everybody's sort of sitting on the sidelines, not bringing their workforce up perhaps to where they might like to be, until they feel a little bit better about the economy. And as you've heard me say on numerous occasions last year and into this year, and I'll continue to say it, it's our opinion that the economy is doing better than most people think it is. But because of the affordability issues that we touched on a few minutes ago, it doesn't feel like things are going well. And reality and feelings are two different things.
Right.
And the psychological impact of those feelings is being felt and is holding back the economy from what it might be able to become. And until people get accustomed to this new reality in which we find ourselves, where prices are up dramatically by some 25 to 30% since the pandemic, until we adapt to that, people are not going to feel good, and that's going to keep things a little bit on the slower side as a result. But we still see the economy continuing to grow throughout this year.
And final question, tax season is upon us. What help do you think the IRS will be given their downsizing of people, and what should taxpayers do about it?
Well, we've all heard the stories about the Internal Revenue Service and calling them and being on hold forever and ever and ever. I don't know how long forever is, but it's going to be longer.
Yes.
The IRS has taken major cuts as the president has tried to pare back the expenses of the government. When President Trump came into the White House, somewhere around 125,000 people worked for the IRS across the country. Today, it's estimated that that's closer to 75 to 80,000 people that are working. So those folks are really going to be swamped. Calling them is going to be an exercise in patience. Excuse me. The other side of that is that because they don't have as many people to examine returns, particularly larger returns, it's going to be a while for the refunds to come back. Now, on smaller returns, they're going to happen almost on an automatic basis. But those bigger returns are going to take a little bit more scrutiny by the IRS. Even those where refunds are due, the IRS has a propensity to pay the refund and then perhaps challenge it to that not enough was paid in taxes. So it's going to make it a difficult year for everybody. And before we run, let me just remind everybody once again, listeners are entitled to a 1-hour complimentary consultation with me personally. And all they have to do is call 1-800-633-3049. That's 1-800-633-3049. Just say you want to meet with me. We'll schedule a time and be delighted to try to help and answer your questions personally.
Ray, we can never thank you enough. People love your show. You'll be back again with us the first Monday of next month. Thanks so much, Ray.
Take care, Steve. See you later.
Okay, we're going to go to a short break. We'll be right back.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.